Well, it's a big week for some of the biggest names in tech. Facebook, Amazon, and Alphabet each report results this week. They are three key players in an unofficial grouping of stocks generally referred to as FANG. FANG stands for Facebook, Apple, Amazon, Netflix, and Google. You'll notice there's no T in there. Twitter isn't technically a FANG stock, but regulatory concerns mean it deserves a share of the spotlight. Earlier today, that company reported its second profitable quarter ever, in fact. Ad sales and user growth beat expectations, but investors were pretty underwhelmed and the stock fell. The FANG stocks reporting this week have grown to be worth more than all of the stocks on Canada's TSX combined. Google's parent company Alphabet profits were up more than 70% from last year, but its stock fell too. Facebook, of course, has become something of a poster child for regulation. It reports earnings a little later this hour, and Amazon will report tomorrow. But all these earnings beats are making a lot of investors think these tech giants are about to get defanged. To discuss this, let's bring in Ophir Gottlieb, CEO of Capital Market Laboratories. And Ophir, let's start with Twitter, because it's finally making a profit back-to-back quarters. It beat expectations, and still investors don't like it. Why are investors so sour?
You know, I just don't think it was a very good earnings report. I don't think Twitter has had a good earnings report in several years now. Monthly active users aren't really moving, but daily active users are growing. That means there is no user growth, there is engagement growth. And that engagement growth is, in fact, now slowing. On top of that, while they had this revenue growth, they quickly backpedaled and said, well, no, our revenue growth for the rest of this year is going to be more like the slow times of 2016. Well, just so we understand what those numbers were, that was 8% and 1% for the last 2 quarters of 2016. And so there just aren't more people going on Twitter. There's only so much more engagement they can get out of it. They cut 6% of the workforce. They're now adding 10 to 15% of their workforce to deal with partially with sales, partially with hate speech and this data scandal that hit Facebook. I just don't think there was a lot of good news with Twitter's earnings report, other than there's one issue that I think we can take off the table. The existential risk for Twitter is now over. It appears the people that are on Twitter will stay on Twitter. They will continue to engage with Twitter. But I don't see it as a growth story at all.
But I guess it has shown it can now make a profit with the number of people it has on it. The question I have about all this is, you mentioned the data scandal that hit Facebook. Is Twitter vulnerable on that front, in terms of how it uses what data it has and how that can be exploited?
Yeah, I mean, let's talk about the worst endorsement of all time. A few days ago, Alexander Kogan, the professor that was essentially responsible for the data collection for Cambridge Analytica, said, well, gosh, with Facebook's new rules, I would now use Twitter's data licensing business to do what I did last time. I mean, it just could not have been a worse endorsement. And Twitter's data licensing business is the fastest growing part of its business. It's still small, but that's where the growth is coming from. And Jack Dorsey defends it by saying, well, gosh, this data is public anyway. We're just kind of metadata and putting it together. Yeah, just not true. I think Twitter could fall because of this news. I think that they've said out loud they're going to increase expenses to make sure they're controlling at least hate speech. And I think Twitter faces a similar situation to Facebook, not quite as large, but it's not as large because Twitter's not as large.
All right, if you want to talk about growth, let's go back to Google and its earnings that came out earlier in the week. Growth there is back up to like 20%, because it had sort of tapered off a little bit for a couple of years there, hadn't it?
Yeah, I mean, there was a real concern around 2015 about, at that time it was called Google's revenue growth. It was slowed to like 14 or 15%. It's now up to 23% as of last quarter on constant currency. And more than that, their CFO is saying, her exact words were, it's quite extraordinary the opportunities they have for growth. That's in search and YouTube and self-driving cars and medicine. And so I see Alphabet as one of the most impressive growth stories for a company this large almost ever.
And they've got their hardware as well, in terms of the Google Home, their phones, and their Nest series. And they've got, what, $103 billion in cash just lying around under the sofa cushions?
Yeah, I mean, they have a mountain of cash that they're never going to use. It's growing uncontrollably. And the CFO said out loud, look, there was basically two choices as investors. Google could have said it, or Alphabet could have said, we have a ton of money, we have a ton of profits, we don't really see a lot of opportunity to grow, so we're just going to cut expenses and become much more profitable. Or the second narrative is, we have all of these things, but we see huge opportunities in several different parts of our business, and we're going to spend a lot to make it grow faster. That's what Alphabet said. That sounds like very, very good news to me. The first narrative sounds more like Apple.
Right. Okay, we're still waiting for Facebook results to come out. You and I talked a little bit for a column I put out this morning. What are you looking for in Facebook's earnings?
Yeah, this is just going to come down to this for Facebook. It's are users in any way impacted by the data scandal? So impacted could mean fewer users. It could be less engagement. They do measure the number of minutes per day users are on. If in any way user engagement is impacted in a negative way by the data scandal, whether it's because of privacy concerns or it's just cognition, maybe people are thinking, gosh, do I use my Facebook account? Should I use my Facebook account? If that happens, Facebook's in trouble because that same viral nature that got it to grow can also cause it to shrink. But if that doesn't happen, I don't think advertisers are going to change. They're going to keep spending as long as the people are there and as long as the algorithms work. And that just prints money, and it will continue to print money unless there are fewer users or there are users that are less engaged.
And that same virality, for lack of a better word, that led to its explosive growth about you joined, so I joined, and then my kids' pictures on, so my mom joined, and that just sort of grew and grew and grew. Can that same dichotomy happen on the way back down, that I quit, so you say, well, why am I here? And that can sort of snowball in terms of decline.
There is it. It's all of a sudden it's become like there's cognition. It's a stigma. Like, should I be on Facebook? Well, I'm on Facebook because Peter's on Facebook, and I like you and I like your family, and I want to keep up with them. And then, but if you get off, and then well maybe your family gets off. Well maybe then I'll get off, and then my friends will get off. And the exact same viral trajectory that helped Facebook grow can be the same sort of viral trajectory that can make it shrink, and that there is a danger to that. We have a history of that. I mean, it's a little bit of revisionist history, but that's kind of what happened with America Online, with AOL. At first, it was very cool to get online with these disks, and then people, after a while, people said, oh, you still use dial-up? You still use AOL? And people started tumbling off. And so there is a real danger to that, and we have to see it. Are users impacted by this, or is this just news and it's gone and nothing matters?
I still have some of those disks lying around. Ophir, great to see you. Thanks for doing this for us.
Thanks, Peter.
Ophir Gottlieb, the CEO of Capital Market Laboratories.